Thank you so much, Andy, for joining us. Big thank you, first of all, to Trulea for sponsoring this series on crypto exchanges. And we're very excited and lucky to be joined here by Anndy Lian, who is the chairman of the BigONE Exchange. And they offer a multitude of ways for people to get involved in crypto, from simple investment through to loans and everything else. So Andy's here to talk about the different trading and investment strategies that exist in crypto and ways that people can and are getting involved. So it's important to mention, first of all, that this is not financial advice. Andy is not a financial advisor. He's merely going to be sharing some of the different ways that people do get involved and some of the trends that we see in his space, and what his own thoughts are regarding both individuals and institutions getting involved into crypto, to hopefully show what the potential opportunities are in the space, and also some of the risks about some of the different ways of getting involved in crypto. So Andy, thank you so much, first of all, for joining us.
Good to see you. It's my pleasure.
Well, thank you. And firstly, what would be really helpful is if you could give an overview of all of the different ways and that people can get involved in crypto, and some of the different ways offered on the BigONE Exchange. Firstly, looking at individuals, but then also for institutions to get into crypto, and we're seeing a push towards that.
Sure, no problem. I think based on the exchange, we have our spot trading desk, we have our derivative desk, we have another sector that is looking at some of these ETFs as well on our platform. So we are a Netherlands-based crypto exchange. We have registered entities in Seychelles, and we operate in the many parts of the world. So our products are mainly driven by a lot of the spot trading. The main coins that we all know, from Bitcoin to Ethereum, to Polkadot to EOS. That's one kind of the coins. Then after which we have the altcoins. So we have like today's, I think, hot topic, would be Shiba Inu, coins like that are very much happening and very much hype up in the market. So we have that kind of altcoin as well, new altcoins, new startup coins. And then we have derivatives trading. We are not the most adventurous crypto exchange. We are rather conservative. Our derivatives trading and our leverage options are all fairly low in risk. So that's how mainly the crypto exchange has been run. For some exchanges, they offer a fiat transaction. But for BigONE, we are only going for crypto to crypto kind of transaction. So we do not touch on any kind of fiat exchanging into crypto on the BigONE platform. So this is a quick summary of how BigONE is like.
Yeah. No, thank you. And you say it's relatively low risk, but looking at some of the offerings, futures and loans against crypto, for example, they're not risk free. It's fair to say. And just out of interest, in your opinion, what draws people to these? Of course, on the one side you've got the potential for gains, and on the other side you've got the potential for risk and losses. Do you see any trends in terms of what type of people or users are being drawn to these products and strategies?
I think based on my knowledge, it depends on the kind of coins that we are dealing. So maybe let me just try to make it more general, right? So for the younger generation, they tend to look at the newer coins, right? Coins that are, well, you couldn't even pronounce them, or some of them they are like a meme coin. It is something not very serious, right? Because they felt, the younger generation felt that the coin price is low. They could ape in, or they could buy in, and then the potential of growth is very high, right? Are they of a high risk? Definitely of high risk, right? So this is one segment of people. The other segment will be more of the professional investors. I would love to still call them professional investors. They know what they are getting themselves into. They know different kinds of option to buy, stop. They know how the options are going to work. They know how the futures are going to work. Those guys tend to go for things that are more stable. Like maybe a Bitcoin futures, for example. And then last but not least, there's another kind of guys who are totally, well, looking at the market, right? I would somehow call them like gamblers. They just look at the percentage. They realize that, well, today this coin has a high volume, for example. And the trends from the charts are going up. So some of them, they just go all in, man. And then when I say low risk in the beginning, of this whole conversation, I'm not referring it to just very product specific. I prefer to look at low risk in terms of, if you know what you're going into and you control your own risk, I think the risk is a lot lower than many other investment products in the market. And jumping back to what I've talked about for the gamblers, how they invest and so forth. Many of them go for high risk and high return. So again, when I say low risk, we at BigONE, we do not have those super high leverage products, right? If you go to some other exchanges, they could give you a 50x leverage or even 100x leverage. So in terms of risk level and risk profile, some other exchanges are actually in the extreme end. So that's how that's also one of the reasons why I mentioned low risk. Thank you.
No, thank you. And I mean, you touch on the low risk side, or relatively lower risk side. Of course, nothing is risk free in crypto. What methods would you say, if somebody's new to crypto and sort of cautious to get in, what methods would you see to mitigate as much risk as possible?
Well, if they are new and they still want to trade in a crypto exchange, then my very honest advice is, one, please get yourself educated, because crypto has a lot of changes and not every investor are able to cope with the changes, right? So and let's say example, they think that they know it, they are willing to take the risk. What I would suggest would be going for the more mainstream, or the core crypto, the core cryptocurrency. Maybe going for Ethereum, or
Bitcoin, and not Shiba Inu token.
Yes. Because the risk profile is and the trends are all fairly available in the market, right? So if you are new, and you are going to put in some serious money, Bitcoin, for example, or Ethereum, for example, would be a fairly good choice, right? And then for those who came in with smaller amount of money, I mean relatively small, maybe $100 or $1,000, for example, they might want to go with the other trend I've mentioned. Go for altcoins. Go for coins that are really new and has a potential of growth. Because if you look at the coin cycle for new coins, it's always steady, and then they will just spike up, right? So some of these new guys are actually looking at the spike, looking at the increase, and they hope to get a 2x return, for example, or 3x return, and then they will exit, and then they will go for the next coin. So these are two different profile and two different kind of maybe methodology, behind crypto buying, for new people, for newcomers, that I would think that it would be more suitable,
Yeah, no, thank you. And one of the big trends we're seeing now in crypto is the institutional space. You've got various, or you've got some of the larger companies which we've been seeing led, for example, by Tesla, by MicroStrategy, buying up bits of Bitcoin. But you've also got various different funds and institutionally led funds and vehicles looking at getting into the crypto space, and we're seeing some sort of tiptoeing their way in, and others that are still sat sort of in the back lines looking at crypto and looking at maybe they should start to be getting a little bit, but they're still concerned about things like the safety, the custody, the volatility, and so forth. So a few questions to you about the institutional side of investment going on. Obviously, there's a lot of people in the crypto space do believe that once the institutional money starts going in, then things will really ramp up, and maybe the volatility will go down, and prices will go up. Maybe it's possible, but on the other hand, there's still various factors in crypto. The user experiences, there are now some secure custody platforms and some secure platforms and so forth that make crypto much safer than it was a few years ago on every level. But what do you think is needed to see that institutional drive and money going into crypto, and what do you think the institutions are looking for in crypto regarding sort of trading and investment strategies in crypto? I mean, just one example, I had a conversation with a fund manager yesterday, and he's from the traditional finance side and has run some of the world's largest funds. And the conversation was, well, with traditional finance, you can predict trends, you can do research, you can make more or less informed decisions, and with crypto currently, all you sometimes need is one tweet from a billionaire, or one tweet from somebody who has a lot of followers, and that can massively affect the markets. So how do you see the institutional investment in crypto going?
I think this I think based on my own perspective, on things, the stock market, for example, the traditional finance market and crypto market, there's not much difference, to be real honest. It's just that the pace and maybe the whole impact is a lot bigger, right? Well, in the stock market, someone put up a certain tweet or a certain message, that could also cause some turbulence, but of course they might be asked for a long coffee session by SEC, to ask what is that message about, because it's all regulated, right? I think in time to come, the crypto space will be a lot more regulated and moving towards what you see in the traditional market. By then, if you look at the flip side of things, by then a lot of institutions will come into place. Then the whole dynamics of the whole crypto market is going to change, and it's going to bounce back to what you see in the traditional market right now. Is that a good thing for investor? Yes and no, because a lot of good chances right now are open, to retail investors and to many other investors. Once the regulations kicks in, once the big institution comes in, once they know how to sort of play the game, then the market will be dominated by all the big banks again, right? All the big family offices, all the big financial institutions. Again, is that a good thing? Well, to me, I think it's good, but there's also a bad side of things, right? So I think we shouldn't be looking at it in this manner and do the comparison in that. But coming back to the earlier point that you have mentioned about institutions coming in, about institutions getting themselves in, bigger corporations buying into crypto and so forth. I think right now, comparatively to 2018, we from the industry has increased investment by a lot, by a lot of from family offices, from corporates and so forth. Well, they may not be putting up a news like what MicroStrategy is doing. They are silently buying them, because they felt that, instead of just hedging against some traditional products, they are hedging against cryptocurrency. This may not be in the news, but if you look at some of the reports that you can see in some of these bigger corporates, they have actually put aside X amount of dollars just for crypto-related investments. I see that in Asia, I see that in Europe, I see that in US, and it's all picking up. They are all picking up the steam and buying different kind of cryptocurrency. So again, just want to emphasize the point is that if we think that the institutions coming in right now is a good thing for us, then we really got to think twice. Is this the right time for them to come in? Because right now it's still in a state where things are messy. Maybe government are still trying to cope with the regulations. Is it good for them to come in now and put a judgment to say that, well, cryptocurrency is messy? I think it's too early, to be honest. I think now is a period of time where smaller companies gather together, try to find their way, maneuver their way in the cryptocurrency space, try their very best to see and test out the whole system. By doing that, they become, or every one of us right now become like a tester, to see how this whole testing process is like. From there, the reports can be fine-tuned on the industry level. The government can step in to look at the pros and cons and fill up the gaps. Then at that point of time, when the real big wheels, big institutional wheels come in, things will be a lot more interesting. That's how I see it. Just my 2 cents worth.
Yeah, no, absolutely. I mean, you touched on regulation, and it's that's a slow process that I think is going more slowly than anyone probably would have thought. And we see practically some of the challenges for the regulators in looking at crypto. So that will come, but in time, and probably not tomorrow. But we've also touched on user experience. I think it's known that some of the user experience of some of the crypto exchanges and platforms isn't quite where it could be, and probably where it will be in the near future. And we've seen lots of challenges of things like on and off ramping crypto companies, just for example. So what else do you see needs to come in for crypto to be fully ideal for new investors, but also for institutional money, aside from the regulation and ease of use? Do you see it as a custody thing, as a legal thing, as a clarity thing, as a risk thing, as a volatility thing?
I do, to be very honest, in terms of the custody, of course, people will talk about the custody, the clearance, then they'll talk about the multi-sig wallet, the hot and cold wallet where they are stored and so forth. I think those are not the things that are stopping retail investors from coming in, to be very honest. Let's segmentize this whole conversation, right? So when we talk about the centralized exchanges, I think the user experience are somewhat similar. Of course, there are some of maybe the top 50 in the world. They're the UI, the UX is slightly better than those behind. But in general, I felt that the centralized exchanges are fairly straightforward. You come out with a login with your email, do your KYC, off you go, right? The DEXs, which are the decentralized ones, like Uniswap, PancakeSwap, and so forth. wow, I think the barrier to entry is a lot higher. If you tell your friends, to use PancakeSwap, for example, on Binance, they will say, "Hey man, how can I get some money in?"
Yeah.
Okay. Yeah. So for example, for example, someone solved the problem by transferring some BUSD to them, right? And then they say, okay, I'm going to buy this token, right? And then they realize that, hey, I can't buy it. There's a problem, Then they realize that they need BNB, right? Because they need a gas fee, on PancakeSwap. Then after getting the BNB, then the next problem comes, man. Hey, what happened? I still can't buy it. Then there are other issues like slippage, how much you have, what kind of percentage you're going to put it in.
Mm-hmm.
So there's a lot of different things that are in these DEXs that you need to cope, compared to a centralized exchanges, right? Yeah. Centralized exchange, if you go to some of the top few exchanges, and many exchanges actually offer a credit card solution, right? So you can straight away buy the USDT, for example, off your credit card. Mm-hmm. Okay, perhaps you have to wait for a couple of days, after you do your KYC and so forth. Yeah. Once you're done with that, the money goes in, you can just buy whatever you want, right? So that whole user experience got to change. Centralized exchanges got to help them in terms of transferring their money and converting them into fiat, converting them into crypto. Same for a decentralized exchange. They need to find some ways to help their users cope with that kind of a problem. Mm-hmm. If they can't cope with all these problems, there's no way any users will find that this is real comfortable, mm-hmm. right? So this is more from a trading perspective. Whether they are retail investor or institution investors or corporate investors, they all face the same problem, right? But if you look at the corporates or VCs, for example, or angel investors or corporate investors, there are other things that they can do, right? They can actually invest into the project, invest in equity, for example, So that is also another process that, investors can take part in the whole, crypto investing kind of space. So I think again, for those who get used to the whole interface, I think we can fairly adapt it very well, mm-hmm. But for the new ones, trust me, it is really not easy. That's perhaps one of the reasons why there's a lot of different clubs, different groups, online that are trying to educate, mm-hmm. trying to teach newcomers how they should trade. So yeah, that's how I see it.
Yeah, no, amazing. Well, thank you so much. And it's such a big, great space. And I think what's important to add in crypto is it's moving so fast. It's not static. We've got so many of the brightest minds going to work in crypto companies that I think it is just a matter of time until a lot of these issues are just addressed. And give it maybe 5 years, we'll be looking back and thinking how difficult crypto was back then. But no, Andy, thank you so much for joining us. Really grateful for your time and your insights and your views. So thank you very much for joining us, and big thank you also to TrueLayer for sponsoring this crypto exchange series.
No problem. Thank you.
And see you soon. Bye.
Bye.